The established sequence: gold moves up, it outperforms Bitcoin for weeks or months while BTC quiet or drops. 2, gold's outperformance over Bitcoin begins to slow and then reverses. 3, Bitcoin catches up and vastly outperforms gold and other assets. If this gold BTC cycle plays out like previous ones, we've entered number 2. I believe Bitcoin's overperformance over things like gold has begun. I believe we have entered number 2. I agree with Macroscope. I think Bitcoin is going to be by far and away the fastest horse.
15 years in, Bitcoin's track record is hard to argue with. Out of those years, only 3 have been negative. Every other year has delivered explosive gains, sometimes in the thousands of %. Jack Mallers points to that chart from 2010 to 2025 and says it tells the whole story. Bitcoin hasn't just outperformed stocks, bonds, or gold. It's outperformed everything year after year despite constant criticism and countless obituaries. But this year something unusual is unfolding. Gold is up roughly 48% year to date, and Bitcoin has climbed around 31%. For the first time in history, both sound money assets are leading global markets together. Mallers calls it a major signal, evidence that investors are quietly exiting the traditional system and moving toward assets that can't be printed or inflated away. It's not about short-term speculation anymore, it's about trust. He laughs at those who still call Bitcoin a bubble. They've been saying that for 15 years, he says, and the charts don't lie. The data shows a repeating pattern. Gold moves first, Bitcoin lags behind, and then once gold cools, Bitcoin explodes higher. Mallers believes we're standing right in that middle phase now, where Bitcoin is gearing up for its next breakout while the old financial order starts to crack. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
Bitcoin returns from 2010 to 2025. That's a 15-year track record. 15 years. Look at this chart. Holding Bitcoin, you've had 3 red years of 15. People ask me, dude, how do you do it? How do I do what? Win so much? That's what you want, Mike? You want to ask me a question? You're going to ask me how I just do green, 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 green. Look at that. 9,900%, 1,400%. 186%, 5,500%, 35%, 125%, 1,300%, 95, 301, 66, 156, 121, 27%. The king, the fastest horse. I'm telling you, the charts don't lie. This next one, gold, which is up 48% year to date, Bitcoin up 31% now, are the top performing major assets so far in 2025. We've never seen these two in the number 1 and the number 2 spots for any calendar year. In the 15 years Bitcoin has been around, gold and Bitcoin have never been 1 and 2. I'm going to say that again. Gold and Bitcoin have never been 1 and 2. What does that imply, guys? This is the new monetary era. I see all of these finance bros on all of the social medias. You got all these social medias where you got all this opportunity to spew all this nonsense. And they say, oh, you see that? You got some dude in an empty closet ranting about Bitcoin. This is the top. Who the hell is that? He must be in his mom's house. This is the end of the beginning. We are just getting started. And if you don't want to listen to me, that's fine. You can click on a different YouTube video. But I've been right for 13 goddamn years. Bitcoiners have been right for 15 years. You can no longer ignore the charts. The charts are the truth. And if you've got gold and Bitcoin leading for the first time in the asset's history where they've been operating together, that screams fiscal dominance. That screams fiscal emergency. That screams a new monetary era. That is a rotation out of the US dollar and US assets, guys. I cannot put it any clearer. I cannot put it any clearer. The charts do not lie. And I fully expect Bitcoin to rip and surpass gold as the top performer this year. The established sequence: gold moves up, it outperforms Bitcoin for weeks or months while BTC quiet or drops. 2, gold's outperformance over Bitcoin begins to slow and then reverses. 3, Bitcoin catches up and vastly outperforms gold and other assets. If this gold BTC cycle plays out like previous ones, we've entered number 2. 2. We've entered number 2. You guys know this has been my belief as well. And it's not a belief like a religion. It's not a belief like a bias. It's a belief because of experience, guys. I've lived this. This is the data. This is why this chapter is called The Charts Don't Lie. You got to deal in objective reality, right? Look at the data. Look at the numbers. Do the math. That's all this all is. Wait, how much debt do they have? Wait, how many more Bitcoins can we print? Oh, no more? This is it? Ah, yes, right. Number go up. It's math, objective math. Trump came out and said, you grow yourself out of debt. What does that mean? We're going to run it hot. There's going to be no austerity. There's going to be no magical Elon cuts and Doge. There's going to be no magical other countries are going to pay our bills through tariffs. We're going to grow ourselves out of this debt. That means we're going to print the money. We're going to run the economy high. Real rates are going to be negative. That means Bitcoin is going to the moon. That is what we are seeing. Guys, when you see stuff like this, growth out of debt, that means inflationary. For all my Gen Zers out there, that means buy Bitcoin. That means their inflation is coming back. They're going to have to run it hot. They're going to have to print more money. They're going to drive the prices up of these things. Make sure you get yourself some Bitcoin, okay?
Jack Mallers warns that even if you hold trillions of dollars, it won't mean much when that money can't buy food, gas, or housing. Real value, he says, will lie in hard assets, gold and Bitcoin, because they can't be debased by endless money printing. He believes most of the Western world still hasn't realized what's happening. The existing monetary system is quietly breaking down. Gold is reclaiming its place as the world's reserve foundation, and Bitcoin is rising right beside it. He points out that gold held by the U.S. government is worth far less than the foreign treasuries it owes, and Bitcoin's market cap is still smaller than a single tech giant like Nvidia. To Mallers, that shows how early this shift really is. This isn't the end, it's the end of the beginning, he says. Even major financial institutions are starting to catch on. CNBC reports that investors are flooding into what's now called the debasement trade, buying gold and Bitcoin to protect themselves from inflation, debt, and currency erosion. JP Morgan echoed that sentiment, citing geopolitical stress, fiscal imbalances, and declining faith in fiat money. Mallers believes this quiet rotation marks the first phase of a global monetary reset already in motion. Let's get back to the interview.
We're just getting started. Look at this chart. This implies that yes, the US government's gold position is now worth 1 trillion. It could grow to 10 trillion. It could grow to 20, 30 trillion. They could grow their way out of the debt, like Trump said, where the gold on balance sheet is worth 20 trillion. The Bitcoin on balance sheet is worth 20 trillion. Now, what is a dollar worth in those scenarios? No, the dollar's probably not getting you much gas. It's probably not getting you much food. It's probably not getting you much housing. But Bitcoin and gold will, for sure. Sats will get you what you need, for sure. For sure. For sure. Right? You guys picking up what I'm putting down? De-dollarization accelerates. If gold reaches roughly $5,500 to $5,700 an ounce, all else being equal, it will overtake the dollar as the world's largest reserve asset. Tokenization will further enable gold's integration into the global trade and finance, Gresham's law. The dollar's monopoly is ending, guys. I don't know how else to put it to you. And people think that we can do so. Back in 1980 to 2000, Paul Volcker, he was able to slam on interest rates, so hike rates up, and really pause what was becoming an explosive gold rally after the 1971 divorce from the gold standard. People think that we could go back to that. People think that we have a variety of tools in the toolkit that, oh, gold is running away. Oh, Bitcoin's running away. Oh, stock market just keeps hitting all-time high after all-time high after all-time high. They're not going to let this happen. This is the top. Sell before the next FTX bust. Guys, listen, I'm not here to say what's the top, what's not. You guys know I don't trade. I stay humble, I stack sats. I'm not here. This isn't a trading show. Fuck that. Sorry, just not me. Hard work, principles, morals, family, health, humble, stack sats. I just buy the Bitcoin, no matter what. I wake up every day, I work hard. What's the best place for me to store my hard work? So far, it's been Bitcoin. I'll wake up tomorrow, I'll make that same decision. So I'm not here to call tops, but what I will tell you is this: mainstream media, the greater West, majority of America, Europe, the West at large, they do not appreciate an existing chapter is closing. The game has changed. I'm telling you guys right now, the game has changed. The gig is up. We need to start thinking in relative terms. Gold is becoming the largest reserve asset in the world. Gold is not even 20% of foreign held US treasuries for gold on the US balance sheet. Bitcoin is only $2.5 trillion. Bitcoin is still worth less than certain companies like Nvidia. We are not even close. Beginning is ending. From CNBC, the retail investor crowd has a new trade it is chasing. It's fueling Bitcoin and gold rallies. They literally published that the debasement trade is Bitcoin. The bank is in reference to Chase Bank. The bank defines it as a trade that, quote, reflects a combination of factors, which in our client conversations range from elevated geopolitical and policy uncertainty to uncertainty about the longer-term inflation backdrop to concerns about debt debasement due to persistently high government deficits across major economies, to concerns about Fed independence, to waning confidence in fiat currencies in certain emerging markets in particular, and to a broader diversification away from the US dollar.
Something remarkable is happening beneath the noise of markets and headlines. For the first time in decades, two very different generations of money, one ancient, one digital, are moving in rhythm. Gold's strength and Bitcoin's steady climb are telling the same story from opposite ends of history. People are no longer betting on growth, they're searching for refuge. The trust that once anchored global finance is slipping, and in its place a new order is quietly forming, one backed not by promises but by scarcity. The shift isn't loud, but it's relentless. Central banks keep printing, debt keeps expanding, and investors are starting to recognize the pattern. They're not waiting for an official declaration that the system is broken, they're already acting as if it is. What began as a fringe movement of skeptics has turned into a slow global migration toward assets that can't be diluted or censored. The old world of money still looks stable on the surface, but the flow beneath it is changing direction. As this transformation unfolds, the question becomes, when trust in traditional currencies finally runs out, which form of hard money will lead the next financial era? Gold's timeless weight or Bitcoin's unstoppable code? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.